Mark, thank you for speaking to us today about hedge funds entering into the alternative lending space. Can you describe for us the alternative lending space?
Yeah, so it's evolved over the last few years, I think, especially since the financial crisis. What we've seen is that banks have withdrawn massively from lending to smaller growth companies. And in many cases they're focusing on their home territory or their own speciality. I think we do see a bit of a difference between Europe, the US and Asia, whereby in the US banks are still lending to real estate and making real estate loans. However, lending to smaller companies, they're simply not doing it. Europe, there was a gap. It's been filled up again now over the last couple of years. But there's not enough lending going on. So banks have stepped in, but what we do see is that hedge funds are also in that space here in Europe. In Asia, particularly China, where Adamas is focused on, we do see a different dynamic there as well. Obviously you have the influence of the government over a lot of the banks as well. But what we see is that there are in the space of the SMEs, where we have 50 million SMEs in China, only 4% of them get access to bank financing. So someone else has to step in. And you have different ways of lending. It could be pawn shops, it could be financing companies, but in terms of providing asset-backed and secured lending, there are very few players in that space, but it is growing, and we sort of see that evidence in what we're doing within Adamas as well at the moment.
What is the return profile of the asset class like?
It depends which country, which region, and what part of the capital structure you're in. If you look at sort of the three key geographic areas, what I see is that in the US, you can be relatively secured, but you're in the low teen areas in terms of returns. Here in Europe, because you're still competing against the banks in many cases, it can be sort of high, low single numbers, 8, 9, 10-ish%. But quite often you're a bit further down the capital structure. What we're involved with in Asia, in China in particular, we're very high up in the capital structure, so very secured, but we've got equity-like returns of high teens. So it all depends a little bit where you want to be. And again, even in the Asia space, you have different levels of return depending on where you want to be in the capital structure. But this sort of space works well for us.
How are we seeing hedge funds increasingly enter into alternative lending?
Well, in different ways. We're not unique in this, but we've certainly found a niche in what we're doing. And what you see is a lot of people that used to work at banks, they set themselves up as independent shops. You have the traditional private equity funds, sort of no longer doing private equity, but doing private credit. And I think it's all about to do with what section of the market you want to carve out for yourself. Again, what we're looking at are sort of the 3 to 36 month type loans. We're not doing longer term stuff, which is very common here in Europe. In the US, again, the loans tend to be varying in length, but our niche is the 3 to 36 month, where there is that need, and what you see is that entrepreneurs are willing to take on additional loans to help grow their company. Because again, China is growing. Depending on how you want to measure it, anywhere between 5 and 12%, depending on the sector, the region, and the company, and part of the economy. So someone needs to step in to provide the financing to help these companies grow. So, as an example, Jack Ma should be the richest man in the world right now, but he actually had to go and sell equity in his company a few years ago to Yahoo. And that obviously when Alibaba IPO'd, he didn't own the full stake of the company. Had he actually borrowed the money through private lending, he would have still held that company and repaid that loan. So you see space coming made available for companies and for lending, and the entrepreneurs are willing to take on that level of burden as well, because they don't want to dilute themselves.
What are the challenges, risks, and opportunities for entering into alternative lending?
I think it's a lot of hard work. Quite often what you see, it's not just about picking a liquid stock as you would do in a long-short equity fund. You do some research and you buy the stock. If it goes up, great, you sell it. If it goes down, you might cut your losses. Here you have to really know what's going on. So you have to understand the legal structure. You have to understand how to structure the deals. You have to have the dialogue with the company so that if something starts to go wrong, you can work with them. If it's about enforcement as well. So one of the things that we've worked and spent a lot of time on is how do you enforce if things go wrong. So we use the concept of entrusted loans, which basically means we get a lot of control right up front. So for example, that could mean upfront resignation of the directors. We take control of the company chop, control of the bank, of the accounts. We put our own CFO in place so that we fully know what's going on. And I think that's the hard work. And some people want to take shortcuts in some cases, or they don't fully appreciate the need for that. Of course, on top of that, you have regulation as well. Bringing money into China, in our case, is not always the easy thing. So you have to have all the regulations in place for that. You have to have the right agreements from monetary authorities as well, and not everybody can do that as well. So obviously doing that sort of business in Europe or the US is a lot easier. In China, you have to have all that in place before you can even start doing business. So there's a lot of regulatory hurdles that you have to overcome as well. And then of course there's deal flow. And essentially you only get that through hard work, hustling, speaking to people, having your network. I mean, again, if I look at our market space, there's probably, of the 50 million SMEs in China, 350,000 approximately are in our space that we would think would qualify. But actually we only need to be dealing with 50 to 100 companies to actually have good deal flow. So it's been able to narrow down that funnel into that limited number of companies and to then finally execute on the transactions.
How much institutional investor interest is there in these products?
Absolutely, it's growing a lot. So what we've seen now, in our case, again, we've just done a joint venture with Ping An. They realise they've got certain deal flow and they've got critical mass as well and experience. Working together, we think we can actually attract far more institutional money as well. My background is, I used to be responsible for alternative funds at ABN AMRO Private Banking. I had a nice helicopter view of the world, and you really saw this space exploding, not only in terms of interest, but also in terms of development of the asset class as well. Again, what you see is that the banks are pulling out. We're going back to the old school model of merchant banking again, where essentially you have specialist managers managing or lending money, and we're going back to that model again. So as people realise that and the skill set is developed, you start to see the interest grow massively.
Mark, thank you very much.
You're welcome. Thank you.